Hi, and welcome to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Trevison from OTG Capital. We broadcast locally on Radio Northern Beaches and around Australia on the Community Radio Network and out through a whole range of multimedia channels, including Spotify, including iHeartRadio, and our internet blogs. And again, we welcome a new contributor this week, Ray Khan, and he is from Daintree Wealth. Welcome to the show, Ray.
Thank you for having me, Ray. And it was great to meet you the other day, and it was great to discover that we shared the same great name. So thank you for inviting me on the show. I'm sure it'll be a blast.
Well, look, just so that listeners are aware, Ray and I met at the recent Institute of Financial Professionals Association conference down in Melbourne. And I guess when Rays meet other Rays, there's this dynamic in the room, and Ray Khan, I guess, came across as this very dynamic personality, and I wanted to find out more. Now, we do get the Odd Occasional Financial Planner coming onto the show, and as I always say, look, we're all about education, and one of the things that I was really keen to pick your brains, Ray, on the show is what makes you a little different to other financial planners. And so when we think about Daintree Wealth, and I'm looking at your website right now, I've had other people talking about ESG, and I think it's really timely that we come back and talk about ESG. So before we get stuck into that, maybe tell the audience a little bit about your background, why you got into financial planning, and a little bit about your qualifications.
Yeah, thank you for that. I guess going back to the original point, what makes us different, I always come back to three points. Time in the game, because I entered the industry in the last century, actually, 1999, just. And I've been doing this quite a long time, and over time, I've increased my qualifications, and I've needed to in order to stay relevant. So SMSFs, tax qualifications, investment qualifications, mortgage qualifications, because everyone has property. And that just allows me to look at situations and look at client situations from a multi-lens point of view, and be able to help with a little bit more complex situations. Yeah. One other story I'd like to tell is, my first EFP I got with MLC back in the day when I was a phone-based advisor. It only took me about 6 months, I think, to get that qualification, and I was then able to, really, it was more product sales based, really, and I was able to do that quite freely before I moved into the corporate and institutional advising world. But it just showed you, and that was just when NAB bought MLC from Lendlease. Lendlease used to own it, and what it showed, what the recent Royal Commission showed was, when the banks own these products and they own the distribution, then not much had changed in the last 20 years when I looked back on it. But now I'm really glad to say that the industry is in a lot better shape, and there are real advisors giving real advice to real people and adding real value.
I know we've had Peter Johnson from the AIOFP on many, many times talking about conflicted advice. And so I think you make a very valid point that when you've got ownership, product ownership, as well as agency ownership, it's very difficult to get independent advice. And I think we've come a long way, as you rightly point out, with the result of the Hayne Royal Commission and that separation and the banks getting out of that space. So I guess one of the things that we picked up on during the conference, and we had a great chance to chat over some nice liquid refreshments at the end of that rather busy Friday. Why ethical investment? I mean, it's very topical because right now, when you think about the political movements that are abound, and and I hate using this term, but go woke, go broke. But I hate that, because I certainly believe that there's a way to invest ethically and still make good money. Is that your view of the world as well, Ray?
Yeah, it certainly is. And I think ethical investing, first and foremost, is about understanding that you're not really compromising on investment opportunities and opportunity set these days. It's just about more targeting the types of investments and avoiding investments that you don't want to be part of, and that's more because it aligns with your values. And I always think about ethical investing more about values aligned investing, and it's different to everyone in terms of what they believe in. And I don't really take the approach of imposing any single approach or any single product or portfolio to any one investor. It's a lot. I take more of a tailored approach, but I do ask that, what they value. I have a tool where it's a lot more behavior based, where it goes into, do you recycle? Do you value this? And if we look at the research, and this is done by the Responsible Investment Association of Australia, and it was completed last year. But when Australians think about their super, I mean, these days 88% of Australians expect their super or other investments to be invested not so much ethically, but more so responsibly. And 65% would invest more if their investments made a positive impact on the world. And so there is this undercurrent and consciousness, but in terms of returns and sacrificing returns, I don't think that's necessarily the case these days.
Yeah, I got to say, I agree with you and the sentiment. And I think when you do probing questions with potential investors and you ask that I guess they are leading questions, do you care about the planet? Do you care about, making sure that your dollars are put in responsible arenas? I guess you're guiding the conversation down a certain track. But I used to run investment group discussions with the Australian Shareholders Association a number of years back. And I posed the question one time for a discussion saying, if you had the choice between an ethical investment that was returning, say, 10%, but not quite so ethical one that was returning 15 or 20, I said, what would you choose? And literally every hand shot up and they went, oh, no, we'll take the one with the greater return. And so at the end of the day, I think the heart's in the right place, but the wallet ends up taking priority. Do you find the same when you're having those discussions?
Yeah, I think in more long-term and medium to long-term terms, and I think investors should as well, and I think it's our job as advisors to allow clients to think about the medium to long-term and not be as distracted in terms of what they believe in and aligning with their values. And at the end of the day, for example, if you're concerned about climate change, and a lot of us are, the energy transition and the infrastructure in order to support that, and actually investing in that infrastructure does make a lot of sense. And there are a lot of bottlenecks in terms of that transition, and there are a lot of companies and sectors that are specialist in producing some of those solutions to those bottlenecks that are going to make a lot of money. But overall, Daintree listens to the investor, and we don't necessarily have to put on any screens. Like I said, it's more of an individual an individual based thing. You wouldn't believe by the survey, it's not climate change or human rights that's the top concern for Australians. Can you guess what it is?
If it's not climate change, I think it probably, again, it's quite topical, but I think you mentioned energy transition. And given that, we're probably one of the sunniest countries on the planet, I'd be surprised if people didn't say, well, investing in a solar farm or solar-based type of industries would be a pretty good long-term bet. Would that be correct?
Yes and no. It doesn't come down too far down the list, but topping the list is actually animal cruelty.
Oh, really?
Yeah, and this is what I mean. I mean, it does mean different things to different people, and animal welfare is at the top of most Australians' mind. 74% of Australians want to avoid animal-related issues when investing, including 66% wanting to avoid animal cruelty. Human rights abuses comes in second at 60, gambling 56, and companies that don't pay their fair share tax rounds out the top 5 at 55. Tobacco just under that. So there you go.
It's interesting. So people that don't pay their taxes either.
Yes. Or companies, the corporates, because that's why they've introduced those measures to make sure that the multinationals that make their profits here also pay their fair share of tax here as well.
Fascinating. That's fascinating. I think one of the things I'm just curious, the research that you're quoting from, is that a publicly available bit of research that
it really is? Yeah. So it's RIAA. If people put in RIAA into a Google search, that will come up. It's called the Responsible Investment Association of Australasia. They are the main I guess, responsible investment voice in Australia, both for advisors as well as consumers.
Okay, I'm going to look that up myself, and I'll put that link on the blog. Look, we're just about here at half time. You're on Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson. I'm really pleased to have at the microphone today Ray Kahn from Daintree Wealth. We are going to take a short break, and we'll be back with you in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money, and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments, and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation, or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels, or email. Please search for Dollars and Making Sense in your favourite podcast platform, or check out our blog at otgcapital.com.au/blog. Hi, and welcome back to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson. I'm really pleased to have at the microphone this week Ray Kahn, who is a financial planner with Daintree Wealth. Now, one of the really interesting things about Daintree Wealth, ladies and gentlemen, is they have a particular focus of investing with an ethical bent. So financial advice that you can trust is the tagline that Ray has on the corporate website. And before we went to the break, we were talking about the kind of choices that people may or may not make. And I guess one of the interesting bits of data, Ray, that you were talking about was how animal cruelty and the like is at the top of the list of people, of the topics that people don't like investing in. But when we talk about ESG, there's a number of other aspects, including environmental and I guess government and again, a whole range of raft of reasons why people may or may not go a particular way. So one of the questions I was going to ask you, if a client walked in your door and said, look, I've got a big chunk of change to invest, and I like tobacco and oil, is that something that you would necessarily fight hard to say, look, please don't, or you simply sometimes just be pragmatic and go, well, you know, we have a particular ethical bent, but if that's really what you want to do, we're listening to our clients and we will do as you ask. Is that what you end up doing?
Yes. I ask them what's important to them. If oil and tobacco aren't important to them, then that's not a problem. I mean, the entire list is there's 20 different types of categories that may fall into someone's consciousness in terms of, you know, yes or no, in terms of avoidance or screening out. I mean, I'll just mention a few of the more obvious ones that we come across in our everyday lives. So there's obviously animal testing, weapons and firearms, pornography, investment in armed conflict, labor rights abuses, predatory lending by financial institutions, violations of Indigenous people's rights. I mean, so there's a whole. I also consult to high net worth and wholesale investors. And in the alternative world, there's a whole category that's called litigation insurance, or litigation and funding litigation against oil companies and mining companies that happen to do damage to Indigenous land. And of course, there have been quite a few high-profile cases, both here and overseas. Recently, especially with the Rio Tinto case in WA.
And again, it's one of those areas that people may or may not be aware of, but investing in lawyers that sue can be actually quite profitable, can't it, Ray? Because as you rightly point out, the Yungan Gorge incident over in WA, the BHP incident in Brazil, these are huge settlements with huge payouts where on success, the legal firms will walk away with 40 to upwards of 50 or 60% of the final figure. And if you put a down payment to help them fund that particular
litigation,
there's some good money to be made, no doubt.
And I'll just mention a couple more: fossil fuels, alcohol, fast fashion, logging, nuclear energy, and I mean, there you go. I mean, it's not all just about oil or this or that. I mean, there's a whole lot of things that may appeal or may resonate in terms of someone's individual conscious makeup.
And I think the thing that we've always got to continue to ensure that listeners are aware of is that we're not talking about illegal activity. I mean, gambling is a very high profitable business, and particularly in this country, and it's perfectly legal.
Well.
Pardon?
Particularly for the government, it's profitable.
Oh, absolutely. Not just from the taxes, but when you think about what casinos and poker machine manufacturers and the clubs and pubs associations, these are all legal activities. And so what we're talking about here is not necessarily illegal activity. We're not sponsoring the mafia. And so
I know you may be investing in a software company called Aristocrat, right?
Yes, exactly right. Exactly right.
Which is actually a software company. Okay, they're not a casino. Okay.
But again, it's one of those interesting aspects. It's about degrees of consciousness about what they're doing. Now, I'm an ex-defence person. I served 10 years in the armed forces. And yet, when you think about very good investments about, companies like McDonnell Douglas, Thales, Boeing, these are all big, high-profile. Bofors is another one as well. These are all big, high-profile defence companies. And given the conflicts that are occurring around the world at the moment, they are making a lot of product because there's a huge demand right now, notwithstanding, Russia and Ukraine having a bit of a biffo at the moment. And so if you think about pure investing and making good gains, these are perfectly legitimate investments, Ray. And so I guess it becomes a balancing act, you'd say.
Yeah. And even so, investing in something like Zara or H&M, which we may shop for in Pitt Street Mall, right? So
Yeah,
I
nice
mean,
fashion brands. I know my wife keeps
again,
telling me about them.
I mean, again, they look great. The price point is good, but what's the sacrifice in terms of the production line and where it's made and the conditions for the workers there?
Exactly. So they're all considerations. And I think one of the things that I want to ask you, as I ask pretty well every financial planner that comes on our show, time frame is one of those things. Timing, people keep talking about the timing of the market and the like. And one of the things that I keep saying to people, it's not a short-term game. When you're talking timeframes to your new clients, what are the kind of timeframes do you normally put in front of your new clients that you're trying to advise them and start them on the road to a good financial future?
I always like to think, if it's their ordinary money, I like to think in terms of 3 to 5 years. If it's more super, then I like to think more in terms of 5 to 10 years.
Okay, that's interesting.
Yeah, that's essentially what it is. So that's the same with property as well. So if property is in the 5 to 10 year bracket. Shares can be in the 3 to 5 year bracket if it's mixed up with some other stuff.
Okay, so I guess one of the things I always like to give our listeners is some top tips and some takeaways.
Yeah.
Do you have some top tips that you always try and leave an impression with people that just meet you for the first time, and something that you want to implant with them that they're going to come back and say, you know what, Ray, you mentioned something to me the last time I met you. It's really struck a chord. Is there something, one or two things that you say to prospective new clients that really sticks out?
It's not one particular thing. Like I said, it really depends on the client. But the things that I try to emphasize is I've been around and I've seen a lot, and I've seen my clients through a lot. And I think one of my key roles in that sense is not to be spectacular, but to be prudent. It's tools in the toolbox, which just means that I look at a lot of areas of advice. It's not just the super and investments or insurance. It's also the tax, the lending, the cash flow, and it's the augmentation of looking at it all in one, being able to look at it at once strategically, that really adds the value to a client, because it's not something that really comes naturally for everyone. And the third thing is that thing that we mentioned before. It's the independence, and it's making sure that the person sitting in front of you isn't part of some bigger machine that's really looking at the profits of the bigger parent rather than the client.
Yes, advising for them rather than for the guy that's sitting behind you. It's not a bad way to think about that. Again, I think one of the things from a takeaway perspective, I always mention to people a great starting point is Money Smart, which is the government website. But when you are coming across people, because financial planning is becoming more of a rarefied air, not everybody can afford it, but we are talking about this massive intergenerational transfer of wealth that's occurring with people my age, a little bit younger, but that are now on the cusp of retiring. Is there a good starting point? I mean, I always say to people, start now. You can never start early enough. So that's a key takeaway. But I think no matter what stage in life, what do you think is a good point, a good reading resource or a good starting point? I mean, having a conversation with you, I think, is a great starting point to begin with, right?
I think just becoming self-educated and being interested. I mean, being interested in the aspects of finance that you find interesting, and then taking it from there, really. Whether it be cash flow, whether it be reducing your debt faster, whether it be investing in shares, investing in general. Become educated, but don't be a spectator. Become a
I like that.
become a participant, and you don't have to start with a lot. It's you can start with hundreds of dollars, not thousands of dollars even. And the biggest, the best teacher in investing over your lifetime is the process of losing money.
Oh,
and learning from that.
Fair enough. Okay.
And learning your lessons. Yeah. And that's what I said. You might as well do that when you're starting small. And then it's about increasing cash flow and avoiding debt when you're starting out.
Look, I think there's some great nuggets there, ladies and gentlemen. So I really like that one. Don't be a spectator. Investing is not a spectator sport, and I think that's a really good piece of advice and a nice idiom to take away, ladies and gentlemen. It's all well and good looking, but sooner or later, take the plunge and get started. And I think, Ray, you make a very valid point. Even with a few $100, there's some really good offerings out there that are very easy to use. They're digital, they're online, and I think we're seeing tech play a much larger part in our daily lives in this space as well. So look, Ray, we're just about out of time. It's been a real pleasure. It's certainly different, and I always like to have different on the show. It's always about education, and I think we've hit some good spots here. So Ray Kahn from Daintree Wealth, any final thoughts before we sign off?
Look, there's a lot going on in the world, but I was around in uni during the Asian crisis. I was around during the GFC, working for one of the biggest investment consultancies in the world. Investing is about patience, and it is more looking in the medium term rather than listening to the noise that's in the papers today or yesterday.
Wonderful, wonderful, wonderful thoughts. Ray Kahn from Daintree Wealth, thanks so kindly for being on Dollars and Making Sense. And until next time, we might see you back on the show. Thanks for being with us.
Thank you, Ray.